Well, as you can see, the bull behind me is signifying a raging bull market in the Indian economy. So this edition of the Wealth Creators, we thought of getting you an analysis on how the business of stock markets is evolving, and no better than someone who has done it for almost 30 years. I have with me Mr. Dinesh Thakkar of Angel One talking on this edition of the Wealth Creators.
My pleasure.
Mr. Thakkar, I've seen your company evolve over the period of time, and at a time when 99% of your peers couldn't evolve with time, started off as from a broking company, then you took giant steps to make it a fintech, and now you are looking at parts of the company will be growing into wealth tech as well. Before we go there, I want to understand the bull market out there. You've seen many booms and busts in the market. Are you worried, or are you optimistic and confident? Does it look like any signs of froth, or whatever is happening is actually justifying the economy?
See, I believe we are into kind of like structural bull market, and this kind of like phase that we are seeing, I don't think I have ever seen this kind of structural stability to a bull market. If you look at our economy right now, it's growing at a good rate despite lots of global kind of issues. They are facing inflation and all that, but we were able to control and keep a check on all that. What has happened because of that, interest rate has been kept at a very kind of like reasonable rate. So this gives more kind of an opportunity for retail investor and HNI and ultra HNI to invest in equity and have a faith that this story is going to last for many more years. So I believe we have entered in an era which we have never seen before, where I can confidently say that we are going to continue with this growth rate of around 7 to 8%, funded by our own people who are putting money in equity, giving to entrepreneurs their risk capital what they need. We cannot be in a better phase than what we are today.
Sure. The naysayers are looking at the explosion in the futures and options side of the market. Your company has been a very big beneficiary of that, because capturing the volumes front. But is it reaching alarming proportions in your view, or do you think this is normal when in this type of high growth or superior growth economy, when the outlook on markets is actually good, it is bound to have some amount of kind of confident messaging to the speculators and traders as well? So what is happening actually pretty okay in your view?
So there are two things we have to keep in mind. Yes, what we are seeing, we have seen a phenomenal rise in F&O volume, which to a regulator maybe would be alarming, but to a person who had participated in this market for 20, 30 years, I can understand. This is because we have lots of youth population. They have very high aspiration, and when they enter the market, they always enter with some kind of a leverage product. So if you look at this growth of F&O, and if you look at a growth of customer base for last 7, 8 years, our customer base has grown by almost 10x to 11x. If I put per capita exposure and add 10x to that, our volumes are bound to grow by 10x or 11x. And plus we are seeing kind of like growth in economy that is also fueling more youth to come and invest in equity. And the way youth start their journey is always something leverage product. But they are confident that they can beat market performance, and they have that confidence that okay, we can work on lots of algorithms, lots of kind of probabilities. They feel that we are an educated lot and we understand this.
But
there will be always some froth which regulators should be concerned, and they are taking a right step so that that froth does not go to a level which creates some kind of a systematic crisis.
Right. You have data, right? You have new traders also joining the market, new investors also joining the market. Is the growth in investor orientation youth is also equally good, or it's just the more speculative kind which are increasing because you have all the data?
See, based on our data, I can tell you one thing, that youth starts their journey with F&O, and then they realize I'm unable to make more money from F&O. So part of the money goes into mutual fund. If you look at growth in SIP, it is a result of this people who are coming into the market, trying F&O, getting into kind of like systematic investment plan,
to becoming an
and they even lots of people have created AUM like cash market portfolios and all that. So we have to understand this is a journey. So time and again we have to see how to create more awareness about this asset class, how to guide them, nudge them towards the right journey, but we can't change their choices.
Sure.
Because I think what you does not want is they say, don't preach me.
Okay.
Give me some good examples.
Right.
Based on that, they learn on their own. I don't see any youth, there can be some exceptions, any youth taking a very aggressive stand and losing full capital.
Okay. So what
So at the age of 25, if they're losing 10-15% of their salary or even 50% of their salary, I would be okay, provided they have learned their lesson and they are moving towards equity, which is going to help them to create wealth.
So the solution in your view is regulator has to do whatever they have to do. But from ecosystem participant point of view, you mean to say that education, trader education, investor education is the right way ahead?
Yeah, that is very much important. We should not stop them from coming to the market. And I'm a big fan of this regulation because I have made a big kind of losses during Arshad Mehta scam and all that.
Okay.
And regulator was not active.
Sure.
So always I support what regulation is doing. But at the same time, we should see that we should not discourage them, help them to have proper certification, proper understanding about risk associated with this trading.
Sure. But from the shareholder point of view, I want to really understand from you, 75-80% of the volumes right now are coming from F&O. And if there is any kind of curb, however temporary the volumes may be hit, in your financials, because there's a large section of the shareholders who fear that the entire business model may get shaken. Can you allay fears? Do you have other levers? What kind of levers are they, which you can make up for whatever volume loss or profitability loss may happen due to any regulation or curbs which come in?
See, first of all, I always see an opportunity with a perspective of 10-15 years.
Okay.
So I don't see any shrinkage of that opportunity. So that revenue pool which is there, I don't see there is any shrinkage. What SEBI wants or regulator wants is that they should come in a very staggered way. So that means whatever money they want to invest in equity, that is not going to reduce. That wallet share in speculation, wallet share in investment is going to remain same. So what will happen because of this step? There can be some extra capacity with me, which I have to utilize. Suppose whatever hit I see or drop I see in volume because of this changes. If we look at customer base is growing at the rate of 60-70%. How much time it will take for me to fulfill that capacity and come back to that OPM what I want? Apart from that, we have lots of levers. We don't charge on cash segment. We can charge on cash segment. So we are trying to work out what is the right business model post all these changes. I do not see a big impact on my business model in medium to long run. In fact, I feel it is going to become healthier because of lots of initiatives that we have taken on other areas.
That's interesting. So what you're actually, telling the shareholder community is that at max, it may differ one section of the business by 2-3 quarters on the one hand. On the other, you have additional revenue streams, levers, which you can start pressing like charging higher in cash segment and few others. So net, the opportunity size will not get altered very meaningfully versus what the street is fearing right now.
Two things. One, opportunity size is not going to reduce a bit. And plus in this bad phase, where lots of players will take a back foot, we would be able to gain market share. So in fact, our market share in that final opportunity would be higher.
Excellent. That's a great. Right. So Mr. Thakkar, let's talk about, you've seen 30 years of the market evolution, 15-20 years of the company as well. So you have a very good roadmap on the chart. In fact, talking about chart, this is a very interesting chart which is there on this wall of your company. Started off as a broking company. After a lot of ups and downs, you have actually in 2006 it was a 981 crore opportunity. In 2010 almost 5,000 crore opportunity, and now we are standing in 2024. So this is kind of a chart. If I ask you to talk about the chart which looks ahead, next 10 years, you have evolved from a broking company to a fintech. And now you are very serious about a large wealth tech opportunity, a large AMC which is in the offing. Talk to us a little more about what's happening. A country of savers is now becoming a country of investors.
See, Ajay, rightfully what is happening at this point is that we need lots of investment in this country. And youth have recognized that a right way of putting their lifelong kind of like saving would be investing and creating wealth. I don't think there could have been a right time the way like people are investing, because right now we are seeing a sustained kind of like growth in economy.
Okay.
And plus government and plus RBI is very particular about to keep inflation down. What it means is that investors are going to able to get a real return from their investment. And if you look at India, it is mostly population who are young, 25, 26, 27. They have a long career in front of them. So if they want to really take advantage of compounding and create wealth, the best way is to come to equity and put money, long-term money over here. If you look at wealth creation, which can be generated in an easy way, it requires three components.
Okay.
One is an instrument which can compound at 14 to 15%.
Yeah.
Time. Investor person should have enough time.
Yes.
So youth has enough time to invest 25 years, 30 years. And discipline. If you look at, they have understood power of SIP. If you look, SIP means like they are going to get an average price, they are going to get compounding of 14, 15%, which is fair, I would say, expectation, looking at India's growth for past 25 years. Not that I am saying that it's going to compound at 14 to 15%, but if you look at economy which is growing at a nominal rate of around 11, 12%, and you look at efficient company which are listed, can give an additional 2, 3%.
Sure.
I feel this money is needed to come to our kind of like economy, because this is a risk capital available for entrepreneurs. And what happens, entrepreneurs will start expanding, creating jobs, which leads to more consumption. So we have to kind of virtuous cycle. So I believe what we are going to see in next 20 years will be far more, I would say, brighter and far more sustained growth than what we have seen in the past 25 years.
Let's talk about the wealth tech plan which you have. How will your company in the wealth or which you have just formed, I think Angel One has also infused 250 crore in there to start. How will it be different? What is the model we are talking about? And are you going about the metros, the big affluent families there, or would you also be open to going to tier 2, tier 3, where rising affluent is actually taking shape?
So if you look at India, we have kind of one of the largest population of ultra HNI and HNI, around 10 lakh or 11 lakh people. It is growing at the rate of 16 to 17%. So it is a matter of time that we are going to see a huge population of ultra HNI and HNI. So to serve this category effectively, efficiently, and in a right way, I believe that we have to use lots of technology. See, today we have lots of kind of like tools, artificial intelligence, data analytics, which can help HNI and ultra HNI to have a very effective kind of like solution for wealth management. See, today, until today, ultra HNI was served by RMs, and if you look at cost of RM is regularly increasing. So how to create more efficiency for this RM? Otherwise, what will happen? They would not be able to cater to many HNIs or many ultra HNIs.
Okay.
That is where we believe wealth tech solutions are the right solution, not only to cater to ultra HNI and HNI, but even to affluents. Why they should be deprived of this opportunity? And we believe using technology, we can bring costs so low that even serving affluent with a ticket size of 50 lakh, 1 crore would be profitable.
So what are we talking about here? I know it is too early. I mean, it's just a startup within the company, the wealth tech company right now. But if one wants to have a ballpark, what kind of opportunity size is the company looking at? So how big can it become, the wealth tech arm of yours, in terms of numbers or indicative in the next 3 to 5 years?
See, globally, if you see, wealth management companies have been bigger than AMC companies, broking company. Okay. So what we are looking at is that if at all steps go right, this wealth management can be far bigger than an AMC company. It can be far bigger than broking companies in India.
You already started hiring a lot of people out there. So what will be the key differentiator? Technology, or the people, or the reach, or what is the differentiator?
First of all, when we decided to get into wealth management, we were very particular that we should get best of seasoned player. So people, co-founder of this entity are people who are having almost like 20 years experience, domain knowledge in terms of how to manage wealth. Maybe it's fund management, it is alternative asset class and all that. And these are the people who strongly believe in use of technology to create efficiency and to create good solutions. So we are looking at lots of solutions which will require technology to be introduced, to be more efficient, to be more perfect in their solution. We are looking at lots of artificial intelligence projects that we are working on, where all this domain knowledge can be used to give a very kind of like excellent interface and service to ultra HNI. When it comes to serving affluent, we want reduction in terms of dependency on RM, where affluent can on their own select their asset class, diversification, have an access to all the structured product. So we believe marriage of these people who have expertise and domain knowledge with our engineers is going to create a good solution, an excellent solution.
So, and there is no much capex required in this, right? Is it technology and people? And or you think brand building may require? I just saw you know, participating in the IPL opportunity as well. So, what are the big inputs which will be required to make that company successful next 3 years?
I think what is required is good manpower. Okay. People who have experience, people who understand this thing, wealth management solution. And for Angel, branding is not required. Already we are known in financial service. So that way, when people know that we are entering into wealth management, whenever people will approach HNI, we are sure that we don't have to spend on branding. Because already we are doing branding in terms of, as you mentioned, IPL. So we are spending a lot to get attraction from tier 2, tier 3 and beyond. So we want to create this kind of brand which is applicable to all people who wants to create wealth management, who want to have some help, guidance in their personal finance, but through use of technology.
Since you brought it up, I want to just go back on that point, Dinesh ji, that this time you took a big hit on your OPM as well. You have described it that it was a strategic, kind of step, and this will start yielding very good results going forward. I want to understand the big broader mindset, behind associating with IPL, and what's the idea the next 3-4 years?
See, we strongly believe that what opportunity we are looking at is very big, and it is going to become bigger because participation from tier 2 and beyond.
Sure.
And if you look at our youth, they are more associated with sports, particularly cricket in India.
Correct.
So for them, when cricket starts, everybody is glued to their screen. So we wanted to see that we have a maximum visibility so that people understand Angel One is not about just broking.
Sure.
Angel One is about a super app which has everything. Solution for your wealth, solution for your borrowing, solution for your insurance. And not only that, we'll give you a personalized kind of like journey. When you onboard on our app, you would be able to get a personalized solution because we are profiling. We use lots of kind of like data analytics to understand who these people are who are onboarding, what are the right solution for them. It would be something like when you start a journey, you have full confidence that if I use Google app, I'll be able to reach my destination. Similarly, I want people when they start their career, when they start making full trust that when I start my journey, I am checking what they are doing, I am nudging them to a right product and trying to give them a right solution what they want, which is not available to any layman, even if you are hiring an RM.
Excellent. So you talk about, you have, I understand, also setting up a kind of a lab for analysis and a lot of profiling of customers. What's the importance of that, and intelligence and inputs coming out of it? Would that be shaping the kind of products which you have in your AMC or maybe even your wealth?
Yeah, very much. As I said to you that what is important now, if we don't use intelligence of data which is available, I call existing app our damn app. They actually very dumb. They don't have any brains. Yeah. How to really give them intelligence? We have lots of wisdom in terms of what has worked for different people. But if we code it properly, if we train our machines and app properly, we can give the solution at a fraction of cost. And that is what I feel Angel One's vision is. How to make this app intelligent by using lots of like artificial intelligence lab projects. So we have been running lots of lab projects on data analytics, on artificial intelligence, and whatever new solutions are coming, how to use them so that we are able to give some delightful service or solution to our user. That user can be anything with a ticket size of 500 per month or investing 50 crore.
Sure. So you also hinted earlier that this super app will not only have wealth AMC but also loan products. What are we talking about? Consumer loans? Are we talking about home loans? What exactly are we talking about? Or a basket of bouquet of everything? And how big can this become? This
so eventually, we want to get into all the areas of personal finance. Okay. But we are starting with personal loans because we need digital journeys. Sure. So manufacturers are not ready with lots of digital journeys. Currently, what we are seeing, it is easy to work out a journey for personal loan. In India, if you see, there is a big surge of personal loan. Yes. But I have seen people are unable to understand at what price they should get. Okay. So we can do profiling of a customer and say, hey, look, this is the right price and this is the right bank near you. who is ready to give.
You will be the intermediary,
Exactly.
but you will do the analysis and choose the right product, help the customer choose the right product actually.
So we want to be that platform who has intelligence about you, who has intelligence about the ecosystem around you, and say, look, these are the lenders who are ready to lend you, and this is the right price. And one more thing, when you start borrowing, many people are new to credit.
Yes.
So they don't have credit rating. But once you start this journey, after 12 months, you get a credit rating. Based on that, I can tell you which is the best bank who can offer you at a lower price. Switch this loan.
Excellent. Yeah, that is true. This is true financial freedom in a way, with a lot of customers will start actually getting. Dinesh, let's take the discussion forward in the AMC side. You've seen money management. There are some 35, 40 AMCs already. Many of them have passive products as well as active now. Then there's a proliferation of AIFs also happening. When you talk about asset management, what kind of direction would you like to take at Angel One as far as AMCs are concerned? What is the structure? How are the economics looking over there?
As I said, that we are a platform company. We are agnostic to any AMC. So we would like to sell all products which are available in the market.
Okay.
But particularly our AMC, what I have seen is that a right solution in India is passively managed fund. See, I believe, as I said, that there are three main kind of like legs or engines for a wealth creation. So when it comes to stock picking, not everybody is expert on that. In fact, they lose money when they on their own start to select stock. So for them, I always say, good is go for index fund or ETF. So we have seen index funds have given an CAGR of 14–15%, which is good enough for anybody to create good wealth. So what is important is that I would say for retail, I want to encourage them to invest in index fund and ETF, but none of the AMC is marketing that kind of like heavily, because that model will take time to be profitable.
So how does that fit into your overall model? You think the unit economics may not be as attractive as one would want it, but it will get you the numbers, and on a blended basis, it will all add up.
See, what we look at is that we don't look at profitability every transaction.
Sure.
We look at lifetime value.
Sure.
If we are able to give a right solution to an youth and create that trust, that Angel One is a platform which will give you a right trusted product meant for you at your age, with your risk profile. So if you are able to gain that trust, this person is going to buy mutual fund, is going to buy insurance, is going to buy lending product, going to use for stock market, for wealth management. So what we want to recover is just a small amount from this person. And when everybody is onboarding on app, it does not matter whether we have 2 crore customer or 10 crore customer. There are solutions, more the people on our app. It gives us more kind of like budget to spend on new AI labs, spend on new innovation. So I believe that, okay, we should not look at every transaction should make money. It is important that every transaction that a customer does, it is aligned to interest of a user.
But you have, I'm sure you must have done some back of the envelope numbers. How big all three can become? Existing business, AMC, which is coming up, and even your wealth tech arm. I'm taking a slightly longer term, a 2 to 3 year, 4 year period. What is the potential, which you will not be surprised it can be touched or challenged in the next 3 years?
Usually we don't give forward-looking statement, but I can talk about industry.
Sure. What is the industry?
Wealth management industry, as I said, is far bigger than AMC and broking business.
Okay.
So if you look at India, yet it is far more smaller than AMC business and broking businesses.
But it can reverse.
It can reverse in a big way.
In 3
and
4
look at
years.
AMC business. Also, AMC business has been larger than broking.
My best wishes and our best wishes to Angel One in transforming the business even from here on. Thank you very much for your time.
Thank you
today.
very much. Always
Thank
nice
you,
talking to you.
Thank you. Great, sir. Thank you.
If you like this video, then like, share and subscribe to ET Now.